The capacity to learn is a gift. The ability to learn is a skill. The willingness to learn is a choice. Greetings and warm welcome to all learners to this video on the topic titled Depreciation. Here you would learn to calculate the amount of depreciation that is to be calculated or debited in the P&L account of any business. Slide gives a glance of the concept of depreciation and the different aspects to be considered with regards to its tax treatment. As we all know, depreciation is the reduction in the value of capital assets because of its wear and tear with the passage of time. Assets are classified as tangible and intangible assets. The tangible assets include building, plant and machinery, furniture, etc. And the intangible assets include copyrights, patents, technical know-how, and many more. Under the Income Tax Act, the depreciation of the asset depends on the number of days it is actually put to use. If the asset is used for 180 days or more, then full depreciation is charged. Whereas, if it is used for less than 180 days, then only half depreciation is considered. To charge depreciation on the asset, the assessee should be the owner of the asset and no depreciation can be charged in the year of sale as depreciation is always charged on the last day of every year. Additional depreciation. Usually, plant and machinery carries a depreciation of 15%. But if the business in which the plant and machinery is used deals with manufacture or production of articles, and if the plant and machinery is acquired and installed after 1/4/2005, then the plant and machinery is eligible for depreciation of 20% along with the original depreciation of 15%. The number of days provision also applies for calculating the additional depreciation of 20%. Let's find out the depreciation for the factory building which carries 10% as depreciation. Usually, the depreciation is calculated on the cost of the asset or on the written down value as on the year ending. So here in this case, the depreciation will be calculated on the written down value as on 31/3/20. So we need to find out what is the written down value of factory building as on 31/3/20. For which the format which is mentioned here is to be used. Written down value as on 1/4/2019, to which we add the new additions, that is the new factory buildings which are purchased during the year. From that we reduce the sale of scrap and we get the written down value as on 31/3/20. After finding out the written down value as on 31/3/20, we find out the depreciation of 10% on it. So on 3,60,000, the depreciation will be 10% and amounting to rupees 36,000. After you find out the depreciation, this depreciation will be used to find out the written down value of the asset for the next year. So the amount will be 3,60,000 minus 36,000, which will give you 3,24,000. This being the opening balance or the written down value as on 1/4/20. Let's calculate the depreciation for the following assets: plant and machinery, air compressor and calculator. Now the depreciation rate for all the three assets are 15%. Also the written down value and the new purchases during the year are also mentioned. Also we read that the plant and machinery and air compressor was put to use in November 2019 and the calculators were put to use in 14 October 2019. Now one thing we should remember when we calculate depreciation is that all the assets which have the same rate of interest will be grouped as blocks, like block 1, block 2, block 3. Now here in this case, all the three assets fall under the 15% block and all these are plant and machinery. So all these three assets will be grouped as one block. But whereas if furniture is mentioned, furniture also carries 15% depreciation, but you will not include furniture in this block. Why? Because all these are plant and machinery block and furniture is a separate block. So you need to be careful not only to consider the rate of depreciation but also the category of the asset. Now we will move into how to calculate depreciation. Like the previous illustration, we will have to find out the written down value as on 31/3/20. After finding out the written down value, we need to calculate the depreciation. Now when we do the depreciation for plant and machinery, there are two depreciations that are involved. One is the original depreciation which carries 15% and the next one is additional depreciation which is 20%. This provision is available only for plant and machinery and not for any other asset. So first let us calculate the original depreciation for this block of assets. Now we know the written down value is 23,85,000 and of which we know there are few assets which are bought during the year and which is put to use for a period less than 180 days. In the first slide, we studied that the asset depreciation will be calculated based on the number of days it is put to use. And so, if you look into this illustration, the plant and machinery, the air compressor and the calculator, all the three newly bought assets are used for less than 180 days. And so, only half depreciation will be calculated. So, 6 lakhs is plant and machinery, 30,000 is the air compressor and calculator 5,000. So, these three assets will carry only half depreciation. So, on 6,35,000, 15%, then half depreciation will be 47,625. This is the first step. Next is, we know the total written down value is 23,85,000, of which we have already charged depreciation of 15% on 6,35,000. So balance written down value is only 17,50,000 and 15% depreciation will be charged on this written down value. Here it amounts to 2,62,500. Next comes the additional depreciation. Additional depreciation of 20% is applied only to plant and machinery which is used for the manufacture or production of articles, and if it is acquired and installed after 1/4/2005. And so here this plant and machinery, that is 6 lakhs and 30,000. Two assets are purchased after 1/4/2005, and these two may be used in the manufacture or production of the articles, and so additional depreciation will apply to these two assets only, not on the calculator, because calculator cannot be used in the manufacture or production of any article. So we leave 5,000 and then we calculate the additional depreciation only for the newly bought plant and machinery and the newly bought air compressor. Here again you need to consider the number of days. We already know that these two assets were bought and used only for a period less than 180 days. So half depreciation can be charged. So the additional depreciation will be 63,000, amounting to the total depreciation of 3,73,125. I repeat, plant and machinery has two depreciations. One is additional depreciation of 15% and additional depreciation of 20% and original depreciation of 15%. And everywhere be clear that the number of days for which the asset is put to use has to be considered. Based on that, the depreciation 15% or 20% will be calculated. This brings me to the end of my presentation, and I would like to end leaving behind a thought by Gerald Good. If you want to turn your life around, try thankfulness. It will change your life mightily. Thank you.